And now for more on the Fed's latest decision to hold rates, we're joined today by Professor Shin Se Don, professor at the Division of Business Economics at Sookmyung Women's University. Professor Shin, thanks for coming on today.
My pleasure.
So the U.S. Federal Reserve has decided to hold its key interest rate steady, citing inflation and uncertainties from the Iran war. But the board vote was the most divided since 1992. What are your thoughts on the Fed's latest decision?
Well, even, the decision to hold the rate was 8 for and 4 against. It is 100% anticipated in the market by yesterday. So everybody was expecting the Fed will be holding the rate this time. Most important, information through yesterday's announcement is that the rate will be kept at the current level of 3.75% up to the end of 2026. Many people in the market had expected that there will be at least a couple of rate cuts in year 2026. But today's meeting, manifested that there will be no cut because inflation at the moment, in the month of March, it was 3.26%, way above target, which is 2.0%. And unemployment rate of 4.3% is lowest ever in U.S. economic history in recent times. So labor market is very strong and inflation is very high, and we have to expect further inflation because of the Iran war. So there's no room for the Fed to lower the key rate through 2026. Even Kevin Walsh is nominated. It has become the chairman in this year. So I'm expecting that there will be no more cuts this year.
I see. And how might the Fed's decision affect the Bank of Korea's rate decision next month?
Well, United States key rate is 3.75%, and Korea counterpart is 2.5%. So there is already 125 basis point gap between the U.S. rate and Korea. So Korea rate is very low, and it has been so more than a couple of years. So if the U.S. is keeping the rate at the current level, there's no room for the Bank of Korea to further lower the Korean key rate. So I'm also expecting that Korean, the key rate should be either stayed at the current level, or there's a possibility that Korean rate will go up at least 25 basis points. Because first, Korean currency has been very weak, last 12 months. So if the Bank of Korea lower the rate, the exchange rate will be further unstable. And another one is that housing market has become very unstable, at least in several months. So considering the situation in exchange rate and housing market, I think there's no room for the Bank of Korea to lower the rate. Or opposite, is that probably the Bank of Korea may have to raise in the second half of 2026.
I see. We'll have to see how that goes next month. And Korea's stock market climbed this week to become the world's 8th largest, surpassing the United Kingdom, which is Europe's biggest market. How significant is this, and what does this mean for South Korea?
It is a great feat of achievement, not just of the Korean stock markets, but also of Korean firms and Korean economy. Now, global economy is beginning to realize the potential, industrial and financial potential of Korea, which has been neglected, for a long time. So the stock market in Korea is going to be the issue, not in terms of Korean market, but in Asian market. And what does that will bring to Korean economy? I think it's going to have a huge wealth effect on consumption as well as on investment. So I think economic growth of Korea will be boosted because of the surge in Korean stock prices.
And Korea's stock market growth has been, largely driven by Samsung Electronics, which is the country's largest company by market cap. But the company is right now facing protests from unionized workers over the huge pay gap compared to workers at its rival SK hynix. And there are concerns that the strike action could possibly disrupt global supply chains. What are your thoughts on this?
Understanding, Samsung and Hynix are the biggest supply of semiconductor chips to the global market, global supply chain could be hampered if the friction between the union and the management continues for weeks, if not months. So it's going to have a tremendous effect upon global economy if the friction continues, the month of May and probably month of June. So I hope that the friction should be ended as soon as possible for the benefit of Korean economy and also for the benefit of the union members. So I think the government has to practice very important pivotal role in mediating the union and the management, and I'm expecting the government will participate in mediating the dispute between the two parties.
All right, Professor Shin, thank you so much for your time and insight today. We appreciate it.
You're welcome.